Hi, my name is Lorraine Mekwa, a Business Development Manager at Sanlam Corporate Investments, and joining me is Darryl Moodley, our Head of Lifestage Investments. Darryl, we're almost 2 years into living with COVID, and we've seen that now feeding into major supply chain issues throughout the world. How did this and other macro factors play out in the effect of investment markets in Q3 of 2021?
Hi Lorraine. Yes, certainly COVID remains the major determinant of how we progress, but despite the low vaccination rates in many parts of the world, it does seem that the world is getting on with life again, with people returning to their places of work and traveling and so on. We did see some market turmoil towards the end of the third quarter due to a combination of factors. China's slowing growth and regulatory intervention continues to be a concern, and this was also exposed by the Evergrande default and resultant debt crisis. And in the US, inflationary pressures continue to mount, along with a historically low unemployment rate. It does mean that the US Fed has hinted that the transition from the loose monetary policy that we've experienced over the past few years will be a lot swifter than we originally expected. And this will present a risk for global equity markets, especially as many global stocks are at record valuations.
I'm still so stunned by how often COVID features when we talk of the investment environment. How then did the Sanlam Lifestage strategy fare under these conditions?
Yes, indeed. I think that the impact of COVID is still integral to how markets will perform going forward. That being said, despite the market volatility at the end of the quarter, the Lifestage accumulation portfolio still delivered a positive return of 2.4% for the quarter. The return over the first 9 months of the year has been a staggering 13.3% and 21.7% over the past 12 months. And I'm sure that this is something investors would be pleased about when they look at their member statements. We've seen a bit of underperformance relative to the benchmark over the period leading up to a year, and that was due mainly to the international component of the strategy underperforming its benchmark. But over the 3 and 5 year period, the strategy has done exceedingly well, ahead of inflation and its benchmark, and this is despite the stuttering local economy that we've had. The capital protection portfolio, we know, provides a capital guarantee, which is fairly important as one nears retirement with a large nest egg, and has delivered inflation-beating returns over all periods, and this is net of the capital guarantee fee. So returns of the order of 6 to 7% over the 1 to 5 year period, and then double-digit returns over the 10-year period. And this remains the top-performing, partially vesting smooth bonus fund in the South African market.
I think Q4 will be an interesting one, especially with all that is happening in China and in the US currently. What will you be looking out for in this quarter?
I think that higher inflation is certainly on our radar, both globally and locally. So we know oil prices are on the rise. Locally, we know food prices are also increasing rapidly, and there will surely be a pass-through effect through the economy. So we're looking towards the next Monetary Policy Committee meeting, where we think that the committee will raise interest rates. The market is fully pricing in a 50 basis point hike, but we think that the committee will opt for a more gradual hiking cycle, starting with 25 basis points in November. That being said, we think that a continued global economic expansion will play out, and South African equities in particular are looking extremely attractive at this point in time. There are several risks on the horizon, the major one being that of a fourth wave and its impact during our prime tourist season here locally. We do hope that along with the higher resolve to get our population vaccinated, the encouraging investment returns that we've seen over the past 18 months or so will continue into 2022.
Thank you, Darryl, for your time. It's always such an enlightening conversation with you.